Hello again, you're welcome back to the program, and I am Ignatius Anum. Now, bonds and equity transactions have slowed in Central Africa following the creation of the Central African Stock Exchange. Reports say currently there's an overall market capitalization of nearly $420 million within the sub-region. The decision to centralize operations for a single financial market was mooted by CEMAC heads of state. This came into force in July 2019. In March, stakeholders within the financial market are expected to take stock of operations thus far. The following report captures challenges bedeviling the industry.
The Central African Stock Exchange, now based in Douala, Cameroon, is striving for excellence, its chief executive officer recently told Financial Afrique. Henri-Claude Oyima said all stock market players are represented on its board of directors, including audit and risk committee, nominations and remuneration committees, as well as the admissions committee. Besides the strengthening of the information system, he also told the financial news outlet that there is a slowdown in transactions, with an overall market capitalization of just over $420 million. He equally complains of the unwillingness of companies in the sub-region to join the stock exchange. Only 4 companies are listed on the Central African Stock Exchange, most of which are subsidiaries of multinational companies. The report also made mention of struggles being encountered in the issuance of bonds and equities, describing it as being slow. The listing on the stock exchange of state-owned companies, big private companies, as well as banks and insurance companies in the sub-region would be a good way to launch the stock exchange, which experts say is a precious instrument for financing the economy.
And local peanut processing companies in Senegal are struggling to obtain the commodity for production. They say they have been forced to lay off staff despite the nation being a major exporter of the commodity in West Africa. The government says it has produced some 1.4 million tons of peanuts this year. Meanwhile, some local farmers are cashing in due to the large amount of exports to China.
In Senegal, the appetite of Chinese traders is testing the local peanut trade. Since the beginning of the current peanut season, Asian demand has been stronger to the delight of producers. But the local oil mills, deprived of raw material, are not happy about this, since they are severely affected largely due to the imbalance in prices set by the Chinese.
The price at which the Chinese buy is not good for us. We sell at a loss. The Chinese dictate their own prices to us. Rather, it is up to the government to impose a price on them.
According to the Peanut Growers Association, growth of the market has improved the lives of some farmers in recent years.
Today, the farmer of the 1970s and the 2000s is not like the farmer of 2020.
China is the leading importer of Senegalese peanuts, the country's main crop, since a deal was concluded with Dakar in 2014 and renewed in 2019. From around 100,000 tons in 2015, exports rose to 200,000 tons last year, according to an export manager. But the increase of the coronavirus in China is likely to dampen the growth due to the expected slowdown in orders.
And that's it for Business Africa. You can be a part of the program via our various social media platforms. Follow me on Twitter at Ignatius Anna. Also, head over to Africanews.com for the entire program and more. I thank you for watching, and goodbye.